Welcome to TapHere, the podcast where we look at all things related to technology, capital markets, the movement of money, and really delve deep into trying to explain what all this stuff is, how it works, and where it's all going. Today we have our first inaugural guest. His name is Jay Bala. He is the founder and CEO and portfolio manager of AIP Asset Management. AIP is a credit-focused fund. It actually focuses on private markets. And what we're going to talk a little bit about today, or more than a little bit, I hope, is IPOs. The IPO market, the fact that it has not happened or frankly hasn't taken off since like 2021 and hopefully is on its way back. But we're going to talk a little bit about how those two things go together. And Jay's going to explain exactly what stages a private market might want to consider going public, and also what it would take for an investor to actually get their hands on private shares. So Jay, thanks so much for joining us. Really appreciate it. So you are founder of AIP Asset Management. Now tell us what AIP Asset Management does.
Sure. So AIP Asset Management, I guess the original name was Alternative Investment Partners. And it was really just meant to catch a growing trend in the market, which is, the alternative space was growing. And the alt space is really a large bucket at this point. It's private credit, it's private equity, it's venture capital, it's real estate. So it's basically everything that's not on a stock market.
I believe you were named the 2014 Entrepreneur of the Year Award, or was that the E&Y?
Yeah, no, we got nominated.
Nominated, okay.
We didn't win.
That's okay.
Yeah, exactly.
That's definitely a good shout out. That's great.
Exactly.
The point being, you've got street creds. You certainly understand the private credit market. You understand the space. You understand valuations.
Yep.
And a lot of what people have been talking about lately has been the initial public offering market, or companies that are supposed to be going public. And one of the things that has not happened at all is since basically 2021, the market stalled.
Right.
So when you think about, some big, huge Google going public or Microsoft or whatever it is, we're not seeing it, but we keep being told it's coming. So what I wanted to talk about today, and what I'm hoping you'll give us some insight into, is okay, so whether or not this IPO market resumes its big balloon trend, right? What are other ways that people can actually invest in different kinds of companies? And from your perspective, trying to just get some ideas about, what that all means.
That's a great question. And like I said, that's kind of the reason we're in the investment business, particularly in alternatives. So alt investments is a good way to get into the pre-IPO markets, right? So ultimately, if you think about it, what is a pre-IPO company? Well, it's a private company, right? And we all have relatives and we all have friends who own businesses. They just happen to be small businesses. Now, if those businesses become really, really big, then, you're coming into the world of private equity and you're coming into the world of pre-IPO companies, right?
Right.
And so at one point, it's critical mass. It just becomes too big to be a private company anymore, right? So if a company's got tens of thousands of employees and you've given them all stock options, well, what does that now mean? You can't sell them. It's a private market, right? You can't get out of them, but they keep telling you, Corey, this thing's worth $500,000. Well, It's only worth $500,000 if you can sell it for $500,000, if there's an adequate buyer.
I mean, even what we're talking about right now, we're talking about much larger companies. We're not talking about like small, mid-sized businesses looking for, startup loans, that kind of stuff. We're talking about the point in a company's life cycle where what people refer to as, they're going into that unicorn phase, let's say, or towards that.
Right.
So, and in terms of when you get to that phase, and maybe you've had a couple of rounds of raising, 50 million here, 120 million there. So I just want to clarify, that's the kind of spot that we're talking about. Is that right?
And much larger than that. So because of what's happened in the world and the way capital has now moved, these companies are very sizable. So if you look at the entirety of the market, there's over 1,200 unicorns globally.
Wow.
That means companies that are worth more than $1 billion. In totality, they're worth about $3 trillion in AUM. And so by comparison, if you think about it, it's about the same size as the Toronto Stock Exchange and slightly smaller than the London Stock Exchange. So a very sizable market. And that's just because of the influx of venture capital, private equity, and private credit into the space.
So big picture, what you're hearing a lot about is, yes, the IPO market is about to take off. It's been 4 years. And by the way, from 2021 till about now, it's down about 90% from what I understand in terms of the actual dollar value or dollar volume that's come out. Right. So 2021 was a huge year and it's been really, really not good since.
Right.
But other people, I mean, what you're hearing about, and even the things that you and I are talking about right now, there are other ways that these companies can raise money beyond getting to that stage, getting that bell to ring at the New York or Toronto Stock Exchange.
Right.
So talk to us a little bit about like, what's your perspective? Do you feel like right now it's got to get to that IPO stage, or do you think people are kind of missing the point?
I think it's a bit of both. So, I mean, I guess you got to think about, I guess, again, like how that world has changed, right? And so if you look at this $3 trillion market, and then if you look at retail exposure to that space, it's pretty much zero, right? So that just tells you it's mostly just institutions that are coming into that fold, right? And so if you look at something like OpenAI just did a $40 billion raise, which is with a B, right? And so that would be bigger than any raise in Canada, period. It's probably one of the largest raises ever, right? And that is completely institutional backed, right? I mean, we got a participation unit in it, we invested in it, but as AIP, correct. Okay, but most people can't do that, right?
Right.
And so, in fact, 99% of society can't actually do that, right?
Yeah.
And so, again, it's the idea of critical mass. But if you look at OpenAI, just about everybody you know has heard of it, knows it, used it, has an app on their phone. And so, and it's growing rapidly.
You know who told me the number about the IPO and that difference between 2021 and 2025?
Yeah.
ChatGPT.
That's
exactly.
That's right.
So there you go.
There you go, right?
What kinds of other companies would people be familiar with? What kinds of names?
SpaceX is another big one.
Okay, SpaceX, heard of it.
Epic Games.
All right, Epic Games.
Right, so like anyone with kids has Fortnite, and they have hundreds of millions of customers, and they've been around. So it's a huge company. Databricks has been around. Stripe's around. So these are all multi-$100 billion companies. They're gigantic. I mean, not Epic Games and the rest of them, but guys like SpaceX and OpenAI. I mean, definitely they're in that fold, right? They're in that range. And so, and what we talked about was sort of that critical mass. At one point, you're just too big to be a private company. So if you think about a guy like Elon Musk with SpaceX, sure, he's got lots of capital, so he's glad to wait.
Yeah, I mean, he's not in a rush to go public on that.
But what happens if you're 27 and you've got $1 million worth of SpaceX shares? You might want that house, right? You know what I mean? Like, but you might want to buy it,
isn't it? But that's the point. Right. So, and what we're looking at right now is all kinds of different types and ways of marketplaces, right? Different marketplaces, private marketplaces. Right. Where if I am a founder, if I work for a founder, if I'm in one of these companies and they're giving me these shares.
Right.
So the old way of doing it was you go public, the stock shoots up, you cash out as soon as you possibly can, and then you can buy your fancy house with a pool.
Right.
But now there are other ways of doing that. So I think that's more, and I get where you're getting to about access, but I'm wondering like, how can the average investor sort of put these two things together?
Yes, very interesting. I mean, there are a number of ways to get into that world. I mean, but you got to start with being, at the current moment, you still have to be an accredited investor. So you still have to be a relatively wealthy person to buy it. But there are multiple access points. I mean, we're one of them. We can obviously get people access to certain names. There are institutions like us that can do that. But it's still a very limited space, right? Like, you know what I mean? Like, if you think about, again, that's sizing, right? So if you say the Toronto Stock Exchange is $3 trillion, how many access points do you have into that market? And the answer is thousands. You can buy an ETF, you can buy a fund, you can buy a stock. I mean, and it's a completely liquid system. Now, if you look at this thing, 3 trillion, similar size, 1,200 companies, think about the number of access points. You can count them in your hands at best, right?
Right. So, and that makes sense. So you still, and then when people are talking about, the sort of rebirth and sort of the re-explosion of the IPO market.
Right.
Number one, that's for individual investors, you, me, our advisors, whoever it is, to obviously get a hold of some of those shares and hope they go to the moon, right?
Right.
And then the other part of it, of course, is, it's that liquidity and accessibility that still exists in the private space, but just not on the same level.
Yeah, I mean that's correct. And the other one is, remember, the IPO market speaks to the health of the entire system,
I
right?
see.
You know what I mean? So, if we backtrack it all the way to the beginning of, what's the purpose of the stock market? The stock market basically took money from wealthy people and gave it to people with good ideas. That's the functional tool that the stock market is,
Sure.
right? And so if that system's not working well, that eventually impacts society, right? And so we need that health of the IPO market to come back in some sense,
Okay.
right? At the end of the day, if you want that capital to be dispersed amongst everyone, as opposed to just having this tiny sliver of people that have all the money and are now invested in all the high growth companies,
Yeah.
that's a problem, right? Like that's a significant social issue at some point.
Right.
And so it's very important that they eventually go public, right? And so, I know it's not perfectly investing, but just as a societal idea, like it's meant to kind of grizzle through, right? Like that's the whole point.
No, and I think that makes sense. I mean, and part of me and some of these very, very sort of broad, high-level discussions, like if you're reading the headlines,
Right.
one could think that the IPO market, the stock market, it's like, why bother investing or going to all the trouble
Right.
to raise money in public markets when you can actually go to the private markets and do the same thing? I think what we're getting at here is, well, what's the next, 5, 10, 15 steps after that?
Right.
And you're saying it's not all over for the IPO market.
Exactly.
Okay.
Exactly. I mean, I think that the eventuality is you have to give the average investor, the average person, the ability to risk their capital and bet on a growth company, right?
Right.
And so that's the end result. It's a bit unfair if you think about it. If it's, if I can buy OpenAI, and it's one of the fastest growing companies in the world, and everybody's using technology, but 99% of society can't. One of us is going to get wealthier, and the other one is going to stay static.
Let's
Right?
switch. Yeah, of course. And let's switch to that for a minute, because now what we're talking about is, the accessibility, advisors, different professionals that can help investors
Right.
not only like get access, but actually navigate the kinds of investments that they're potentially looking at. So, so talk to us a little bit more detail about sort of what you envision advisors, or you allowing advisors to do for their actual clients from a private credit perspective or a private capital perspective.
Sure. No, I mean, look, I think it's become, like I said, because it's become a market unto itself. Not allocating some sleeve to a portfolio for alternatives is doing a disservice to your client, right? Like if you think about it, a lot of the public companies don't grow as fast as the private ones do. And by saying, well, you don't get to participate in SpaceX or OpenAI or faster growing companies, and you only get Bell Canada, which is a static company, you're doing a bit of a disservice to the client ultimately, especially if they're, kind of medium risk, medium high risk, and they're looking for that growth. Well, you're not really providing it, right? So I think, as an investor, you need to start asking the right questions to your advisor to say, look, why aren't we looking at this, right? And it can't just be a function of, oh, it's high risk, right? Because risk is also a broad category because,
Yeah.
if you think about, and again, OpenAI, it's valued at like $300 billion. That would make it bigger than Bell Canada. Actually, it's bigger by tenfold. So why is Bell Canada considered low risk and OpenAI considered high risk?
I'm sure someone will have an answer for you there, but anyway. But we get your point.
Yeah, no, but the point is, ask the questions. I'm not suggesting there isn't a valid reason. I'm not even saying it's not a higher risk investment.
Right.
But I'm saying, ask the questions to see what they say in return to you, right? Right? Because remember, it's a two-way relationship, right? Like the relationship with your advisor isn't that you go sit there and he preaches to you. It's he's doing you the service, or she's doing you the service. You go ahead and ask any question you want. And the day they say, look, I'm not answering that, or I think that's a foolish question, get yourself another advisor, right?
Yeah, no, that would definitely make sense. Yeah, you want to make sure that they do have all the information. And I mean, there's so much going on out there. I mean, and actually it raises another interesting question. We were talking about this before we sat down. Even something that's new, like a stable coin or some kind of new marketplace.
Right.
That again, the whole concurrent theme here is giving investors access to companies that do stuff, right? That
Right.
they maybe have not had the ability to have access to before.
Right.
So I hear what you're saying about private, and it sounds like from your perspective, it's still pretty private, right? Like it's not for everybody. The person on the street can't necessarily go and buy SpaceX tomorrow.
No.
Got it. But the eventuality is they can go public through an IPO.
Correct.
And there's all these other types of avenues to potentially explore. And maybe we can talk a bit about that because I think people are still, certainly me, getting our heads around, like, how do you actually do that? Like, what is a stable coin? What does all that mean? When a company is offering a digital asset, should I buy it? Should my advisor know about that? I don't know.
Yeah, I mean, it's interesting. I mean, we haven't done a ton of work on the stable coins and crypto.
Okay.
And it's really a function of we don't really have the skills to do it, right? And so we're very honest about and transparent about what we do. We know what we know.
And you know what you don't know. Yeah.
Exactly, right? And so, if somebody ever comes by and says, what do you think of the stable coin? I say, listen, I don't know, but I know a couple of people that might know. And so why don't I introduce you? And then, I hope you find some way to work with them, right? But that's not our world, right?
Yeah, fair. Okay. But in terms of, and maybe the better question to ask is like looking at from a technological perspective, right? So you do have, everyone's talking about, learning language machines, or ChatGPT, you name it, and how that's supposed to be helping with the research, the analysis, the underlying, kind of valuations.
Right.
Any of that stuff, like how do you kind of approach all that?
Yeah.
Private perspective.
It would be more difficult because at the end of the day, if you think about it, a private company is private for a reason. It's that they don't want to provide all of this information.
Yeah, exactly.
Right? And so AI isn't going to help you find information that doesn't exist. You know what I mean? Like if a company is like, I'm not providing financial statements that are audited, well, AI can't get you that piece of information, right? If, SpaceX comes out and says, I'm not going to give you the blueprints to my rocket ship, well, AI isn't going to help you get there, right? So like, it's got limitations. It's whatever data it can access at this point. And so for private companies, you still have to have people that understand that world, right? Like there's no other way to do it, right?
And sorry, you were saying earlier when we were talking before that the types of information and the types of research that you're looking at, whether it's public or private, it's pretty much the same. Is that right?
It is. Because if you think about it, right, like a large company, like again, I'm going to use the biggest ones like an OpenAI or SpaceX, you can look at their value chain. At the end of the day, they have customers and they have vendors and they have suppliers. So you may not need to know exactly how SpaceX is doing or their financial statements to understand how well the company is doing as a totality, right?
Right.
You can still look at what are their vendors saying, what are their suppliers saying, what are their customers saying, right, about that space. And if they're saying, look, we're seeing more and more demand, we need to launch more satellites, that's a good way of gauging because it's such a gigantic company and they have such huge market share. You have a pretty good idea of how to do that. Now that's very time intensive, right? This isn't simply you Googling something, you're gonna have to go listen to, you gotta have to read the research reports, you're gonna have to go talk to management if you can, right? Listen to the earnings calls, you're gonna have to digest a lot of info to get you there, right? And so if you don't do it right, you can make a lot of mistakes, right? That's the reason, it's sheltered in that institutional realm, right?
So in the public markets, and again, there's a lot of information there. Not everybody always sort of knows, or sort of leans into exactly, what the right numbers are or what the forecasts are. That's apparently why we have analysts out there, so I'm told. And then in the private markets, it's kind of the same stuff, but it's just a little bit more complicated. And there isn't a regular kind of discourse or rhythm to it.
That's right.
Yeah. Now, do you ever see these things? I mean, I guess the question is, have they come closer together at least? Or do you see them maybe kind of, I don't know, overlapping, integrating, complementing?
No. I mean, I think they want to be private because they want to be private, right?
Okay.
That's the reason, right? So,
but again, maybe it's because they don't want to bother going public.
Well, that's the thing, because there's a lot of restrictions on what you can and cannot do once you're public, right? Now you're a public entity. And so there's a million laws that tell you what you can and cannot do, right? there's a million eyes on you, and it makes running an actual business a bit more difficult, right? It's kind of like having your parents stand over your back while you're typing, right? It makes it a lot more difficult.
I've actually had that happen.
Yes.
Yeah, it's really unnerving.
Yes.
Yeah. So Jay, one of the things that we haven't really talked about too much, which of course everybody always wants to talk about, is risk.
Right.
So in the private world, risk is going to be, certainly one set of criteria, one sort of way of looking at things. In the public markets, it's going to be different. In crypto, it's entirely something else.
Sure.
But talk to us a little bit about, just from your perspective in your world, from private capital. How do you define risk, and how do you hope that advisors will define risk for their clients?
Sure, I think that's a great question. And look, I think there's two big risks, right? Number one, obviously, is look, it's private, which means liquidity risk, right? And so, you need to have a discussion with your advisor on what's a good allocation for your portfolio based on your needs. And it needs to be something relatively small to start with, right? Now, if you're 5% illiquid private and 95% super liquid, you're going to be okay because nobody needs 100% of their capital tomorrow, generally, right? But if you notice that private pool of illiquids is a much larger pool, well, you better have a real plan on, how that cash flow is going to work out when you get your capital back. So, there's a lot of planning in there, and I think that's when you want a smart advisor, right? Somebody that can plan that out for you.
So here's a scenario. So our friend Elon Musk, who owns SpaceX, who owns Tesla. Elon Musk decides, you know what, I'm going to go up into one of my spaceships and go into space.
Right.
And God forbid, of course, but something happens to Elon Musk.
Right.
Now that's a risk. That's actually a risk of somebody who, and right now, as we all know, there are very wide discrepancies of opinion about his ability to run companies or inability, all that stuff aside. How do you kind of incorporate that kind of, unknown, crazy kind of risk when it comes to something that's, again, it's not on the public stock exchange. It's not a publicly traded thing.
Yeah, no, that is a great question. So at the end of the day, that's why we have diversification. Make sure you have many, many companies, right? And so, the probability of, Sam Altman, Elon Musk, and a whole bunch of other guys all getting on the same rocket ship and blowing up at the same time is very low. So, what you want, it comes down to first principles, diversification, right? If you own 20 different companies, you're going to be okay. If you're, the guy who's like, I will bet everything on one company because I think this is a winner, that's never a great idea, right?
I have a lot of jokes going through my head about what you just said, but we're going to park that. Well, maybe we'll revisit it another time.
Exactly.
So just to kind of summarize, this is going to be kind of like the, the interview question, where do you see yourself in 5 years? But it's a little bit different because in more, I think what's interesting is with the technology you're seeing, with some of the changes you're seeing about how generally, and that's been the theme of today, how can you access different types of companies, different investments, and there's all kinds of changing and new ways to do that.
Sure.
What do you think it's going to look like 5 years from now?
Look, I think 5 years from now, you're going to have far more access points into the private markets, right? So like we said, it's 1,200 companies right now, over $1 billion, $3 trillion in totality. I think that $3 trillion is going to grow significantly from here. And I think everybody is going to understand that, you need to have some privates in your portfolio, right? Number one, it's a bit of a volatility dampener if you know how to use it properly, right? It's a good alpha generator, once again, if you know how to use it properly. And it's a great way to access high growth companies. Because I do believe that the next, magnificent 7 are still private and they still grow. And they'll come to market one day. And, those that catch these trends early are going to make a lot. And those that don't will make market rates, right? And so with that expansion, you're obviously going to see more and more access points. And I think, there's going to be a lot of creativity out there. I think there's going to be a lot of innovation in that sector on trying to find, what's the right vehicle to get maybe, retail investors some exposure to that space.
Right. So you heard it here first. What you're basically going to have to do is call up this gentleman here. You're going to get access to all kinds of new and exciting private deals, and it's going to be a new world. That's what I'm hearing correctly.
Exactly.
Yeah, there you go. Okay. No, in all seriousness. Yeah, no, obviously, it's going to be a pretty interesting time as we move forward. I think, and one of the themes of today was, okay, the IPO market has been stalled out, and again, from a very, very layman's terms perspective,
Right.
is it coming back? And I think the answer is yes, but there's all kinds of other options that are also coming back.
Absolutely. So part of it is it has to come back, right? To maintain the health of the system, the IPO market must come back. That's just a functional reality, right?
Okay.
Because, venture capital or any other fund has a timeline, right? So, if you invest in a VC company, you got a 7-year timeline. At the end of 7 years, you want liquidity. And so you need that access point, right? And so you need, for the health of the entirety of the system, you need the excitement of the IPO market, and it will return without any question. It's just a function of when and how, and being patient, right? Investing isn't, it's more of a marathon. It isn't a sprint, and so people need to understand that, right?
Very true. Unless you're an investment banker and you really want this IPO market to really kind of take off already, don't we? Yeah, exactly.
Exactly.
Jay, I can't thank you enough for joining us today. I really appreciate it, and hope to see you again soon.
Absolutely. Thanks for having me on.
And now for the legalese. The information provided in this podcast is for educational and informational purposes only and does not constitute financial, investment, or legal advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Past performance is not indicative of future results, and all investments carry risk. The views expressed are those of the hosts and the guests and do not necessarily reflect those of any affiliated organizations.